Hey everyone, and welcome to this explainer. Today, we are diving into something genuinely fascinating in the retail sector. We're unpacking the Q1 2026 earnings and the overarching strategic engine that's driving Academy Sports Plus Outdoors. In a retail landscape that has frankly been pretty challenging lately, Academy is putting up some serious numbers and laying down a roadmap that really stands out. So let's explore exactly how this company is navigating the current economy.
Let's kick things off with a pretty bold statement from June 9, 2026, delivered by Academy CEO Steve Lawrence. He said, "Based on our Q1 performance, we are raising the low end of our full-year guidance." Now, in a macroeconomic environment where a lot of retailers are pointing fingers at inflation and pulling back on their outlooks, actively raising guidance is a massive signal of confidence.
And the standout number giving them that kind of swagger? A 6.7% year-over-year sales growth. In today's climate, where we all know consumers are tightening their belts, generating top-line growth like this proves that Academy's strategy of offering outstanding value is absolutely winning over shoppers. So here is our game plan for today's explainer. We'll look closely at that winning Q1 performance, trace their incredibly surprising history from selling tires to retail dominance, check out their post-IPO success, and then unpack their white space expansion strategy, their customer loyalty engine, and finally, their massive $8 billion horizon.
All right, let's jump straight into that first piece, their winning Q1 performance and how they are basically defying the broader macro economy.
When you look under the hood, the composition of this growth is what's really interesting. It's not just coming from the 2 new locations they opened in Ohio and Oklahoma. Their comparable store sales are actually up 2.9%, and even more impressive, their e-commerce channel surged by 17.4%. Because they managed to maintain a really healthy 33.2% gross margin, they drove their bottom-line adjusted earnings per share to 93 cents. That is a 22.4% jump from the exact same quarter last year.
Now, to really understand their current momentum, we kind of have to look backward. From tires to a retail giant, it's honestly a historical surprise. Get this! Back in 1938, Academy actually started out as a family-owned tire store down in San Antonio, Texas, like literal tires. Over 7 decades, they completely pivoted into the sporting goods and built out a 1,225-store chain. But then the velocity just completely changed. They were acquired by KKR in 2011, went public in 2020, and by the end of fiscal year 2025, this former tire shop achieved roughly $6.1 billion in total sales. It's a wild trajectory.
Which brings us nicely to their life as a public company. It truly is a post-IPO success story built on delivering strong results.
Since hitting the NASDAQ, Academy has executed this highly disciplined, self-funded growth strategy. We're talking a 4.6% compound annual growth rate in sales. But the real kicker here? A 430 basis point, or 4.3% improvement in their gross margin. They are becoming significantly more profitable as they scale. And look at how smart they are with their capital. They've opened 63 new stores across 5 new states, returned roughly $1.8 billion in cash to shareholders, and repurchased about 40% of their IPO shares.
And what does all that financial discipline buy you? A massive 320% total shareholder return since that 2020 IPO. No joke. By paying down about $1 billion in debt and aggressively returning cash, they've generated immense value for their investors in a relatively short window of time.
So how exactly are they fueling the next wave of growth? Let's talk about their white space expansion strategy. Academy operates with a very clear, unwavering compass. These 5 foundational strategic priorities remain completely unchanged for them. They are systematically growing new stores, relentlessly driving the existing business, building out a powerhouse omnichannel experience so customers can shop however they want, leveraging their supply chain network for maximum efficiency, and executing all of this with what they consider to be the best team in retail.
And man, the geographic runway for this company is just massive. They have pinpointed over 800 potential white space locations across the country, essentially prime, untapped markets that are ready for expansion. Just to put that into perspective for you, if they capture those locations, they'd be growing their store base by about 6 times compared to where they were in 2010. But you're probably wondering, do these new stores actually perform right out of the gate? The short answer is yes. In their legacy markets, a new store pulls in about $16 million on average in its very first year. But even in completely new markets, where they are basically starting from scratch to build brand awareness, they are still hitting an impressive $12 million in year 1. These physical stores are highly lucrative customer acquisition engines literally from day 1.
Okay, so once they get those customers in the door, how do they keep them?
Let's look at how they're building powerful customer loyalty by fueling the fun.
They've built this really comprehensive ecosystem to reward everyday spend, and their credit card programs are a huge piece of that puzzle. You've got 5% off everyday purchases at Academy, free shipping on their website with just a $25 minimum, and some solid immediate welcome offers. By offering a co-branded card that also rewards purchases outside of Academy, they are keeping the brand top of mind and right there in the customer's wallet everywhere they go.
But at the end of the day, we really have to remember why people actually shop at Academy in the first place. Underneath all the financial data, the margins, and the expansion talk, this is a lifestyle brand. Their whole vibe is dedicated to providing fun for all. Whether it's hunting gear, fishing tackle, team sports equipment, or just a dad and daughter playing out in the yard, they sell the stuff that makes weekends fun. And honestly, that emotional connection is the ultimate driver of their customer retention.
So where does all this lead? Let's bring it all together and look at their long-range plan, the $8 billion horizon.
The absolute bedrock for this future growth is one crucial metric: a 20% return on invested capital achieved in fiscal year 2025. That tells us their financial governance is incredibly solid. They aren't just throwing money at the wall to see what sticks. They are putting capital exactly where it yields exceptionally high returns.
Which brings us to their ultimate destination. They are targeting over $8 billion in total sales. The game plan includes opening 125 or more new stores, which alone is expected to generate about $1.9 billion in additional annual sales. Add in a goal of over 15% e-commerce penetration, maintaining a 7% net income margin, and hitting $9 in GAAP EPS, well, you've got the exact step-by-step math they need to scale this $6 billion company safely into the future.
So, that leaves us with a pretty compelling final thought. We've seen their incredibly strong Q1 results, their super disciplined cash management, and those undeniable unit economics. With over 800 potential untapped locations mapped out across the country, is Academy's accessible, value-driven, fun formula the ultimate defense against an unpredictable retail economy? It's a fascinating question, and I, for sure, am going to be watching very closely to see how they execute this ambitious roadmap in the years ahead. Thanks so much for hanging out with me for this explainer, and I'll catch you next time.